We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up GBP, CHF. We are on at the 12-month time frame. Price action, last candle to right hand side is a bearish red candle, spike down to a low, looks similar to a doji. Price second, third, fourth, fifth, sixth, and the bottom of the seventh to last candle half is consolidating. We do have price action. Overall, higher highs. Price action overall, lower lows. Midpoint. Also adding second level lows, third level lows, and fourth level lows. Current price is sitting at 1.11733. So if price work its way up, it can tag that resistance line right above price just by a little bit at 1.15923. Price pushes up further, headed to our white resistance line at 1.65462. And before tagging that, it can tag that midpoint at 1.15923. And if price action pushes down further, it can tag, because it will be breaking out of the overall area structure. So we don't know if this market will mean anything. If it drops down, it could just be like market dropping down for momentum, just losing momentum and pushing right back up like we see on the previous side as a spike down to a low. So the way we break down this market is if price action broke the resistance, now turns to support. If it pushes down further, we're looking for it to tag that large wick down to that bottom for that large third candle in the market. So we look for price to come near the numbers of 0.01472, and that's a far way to go because that market did lose a lot of momentum. So, but before tagging that, it also can tag the midpoint of that area, which would be 0.57843. And if you want extra levels, add a midpoint within this area here, midpoint within this area here, and you'll just take it down until that mark identified a reversal, and it's going to push back up if you'll see it. So there's a lot of patterns in the market, so let's break it down. So let's identify where price is at. Price action, bottom of overall structure. So it returned back to the previous areas of lower lows. So we're looking to see if that market is going to identify a break or retest to push down further, or is going to respect the area of support, because we do see that price action is a spike down to a low and then work its way back up from a pattern. So we'll see what's going on in that area. And also we can see, so let's read the market and see why the market is at this area. And if it pushes down further, why? Coming from multiple pushes to that top. So we have that first, second, third, fourth. That's the break of the market. Retest 1, retest 2, retest 3. We're going to see if we're going to get a retest again and push down for that fourth time. So that'll be the fourth push in the market if the market breaks that area. And if the market works its way up. So if the market works its way up, it could be coming from multiple areas. So far we got like major 4 spike downs. That's the price, the third to last candle of the market, this area here, and this candle here. So this market identifying that there's patterns inside patterns. So it's identifying here, if we take the support and we bring that over and we connect the resistance, we are in a wedge pattern. So market is bouncing up and down. We look for the full breakout of that area. Also, there's another pattern overall as well. When we pull back up to that high, on the highest high of that structure, coming straight down to price near the area of price, and then we go into the area of overall spike down in the market from the previous side, grabbing that support, and we in a wedge pattern again. So it's wedge patterns inside wedge pattern. We have an overall wedge pattern that market is bouncing up and down in, and the market has entered a very tight, small wedge pattern at that bottom. So a lot of patterns in here. Headed down to the 6-month time frame. Price action on the 6-month time frame is reading as a bearish red doji or bearish red candle spike down to a low doji style, showing that this could be the market identifying that it spiked a low and could be reversing to push back up into that resistance to retest that area to identify that pattern or incline W if it does happen. Walking down to the 3-month time frame. 3-month time frame price action is a bullish green candle spike up to the high doji style. So it's a retest. So what the market did was second last candle spiked down, and price action came back to retest that resistance line. We're going to see if it's going to push down further, consolidate sideways, or work its way back up into that resistance line. Working our way down to the monthly. Price action on the monthly. Bullish green candle. So price second, third, fourth, the last candles all consolidating, looking for the breakout to the top side or bottom side. So if this market pushes down to dissect the area, you look for price to break this support, to follow down to that midpoint of that wick, to tag that area of the lowest low to see if it's going to push down further, unless a pattern is formed for that first, second, third, and markets work its way up. And we can see that market does push down. Where is it coming from? Multiple pushes, first, second, third, fourth, retest, 1, retest, 2, retest. We're going to see if we're going to receive that third push in that market. Headed down to the weekly price action. Bearish red candle spike down to a low just like the second last candle. It does have enough momentum to still push down further. Price action body is above the previous body. Price action wick is below the previous wick. Both sides on the low side. So that market identifying that first, second, third, fourth. So we have the break of that market for that double top. We are looking for a retest for that market to push down further. Headed down to the daily. On the daily time frame, price action, bullish green candle. If it's respected for that support, we'll see that decline W, first, second, third, and market close out for that W formation, break out the resistance, retest for that double bottom and a retest. If that market pushes down, we'll talk about that on the 4-hour time frame. Also, we're going to add our zone because we're right above a resistance line. So we can take a look at what's going on. So going a little bit above the SR line and a little bit below. Let's take a look at what's happening. So market started off at the high, broke through the resistance line. So we got the break of that zone, came back to retest that zone to push down further, came back to retest the zone again. So once the market breaks back out, we look for the retest, and the market pushed. And with the receiver after that, market came back to retest that previous side for that market to push once again, created a consolidation, which created that pattern, and that market made it back to the midpoint. So breaking it down is resistance, mid, support, pattern we can see, first, second, third, fourth, double bottom, or triple bottom, I should say triple bottom, first, second, third, fourth, triple bottom, market made it to the midpoint. Now we're looking to see if that market's going to break and retest to push up further. Headed down to the 3-hour time frame, still breaking that midpoint that we created. Headed down to the 2, same as well. Headed down to the 1. Now we have the retest. We have to break the retest. We're going to see if that market's going to push. Headed down to the 45, same candle retest. Okay, guys, this is Cam Jones, FX, GBP, CHF.